Gautam Shah joins us now. Let's connect with him and understand that which way he feels markets are likely to move and when will we come out of this range, Gautam?
Good morning, Nikunj. Well, I think the markets haven't displayed great characteristics in the last many weeks, I should say. I think since the middle of December. And I think we've had these pauses from time to time. These pauses have looked more like distribution than consolidation. We have been maintaining a cautious stroke bearish stance for a while now. And I think there hasn't been any evidence on the table to suggest that we are turning around and we are going to reverse and start doing well once again, because I think the market has really lost its leadership. The momentum on the upside is not there. Every single time the Nifty approaches an important resistance, instead of that urge to actually break out, it just finds selling pressure. And this has happened repeatedly in the recent past. So currently, I think the battle lines are clearly drawn: 17,650 on the downside, 18,050 on the upside. Till we then don't get past this band, I don't think anything special is likely to play out. And the fact that most of the developments or the events that markets were discounting, are now in the price. So whether it's the Adani fiasco, whether it's the budget, the earnings, all of it is now in the price. And therefore, the market does not have any event to look forward to. However, having said that, I don't think this is going to carry on for too long, because currently the price action has been within the swing of the budget day. It was a 600-point swing that day. And since then, the Nifty has been stuck in that band. So till we don't get past that swing, I don't think we are going to resolve into a trend. But my feel looking at the charts is that eventually the markets will break down and see lower levels. And therefore, we maintain a cautious stance.
Let me just look at the other side of the argument, glass half full, or maybe like a compulsible argument. Whatever could go wrong has gone wrong this year. Adani fiasco, haywire movement in the currency, comeback in inflation, commodity prices going here and there, and excruciating selling by FIs. Yet Nifty has not broken below the range. Isn't that a bullish argument which has some validity?
Yeah, it's a good way to look at things, but in financial markets, you never say never. I think there is always some excuse for the markets to fall. When we first started looking at the markets differently in late December, you didn't know what excuse is going to hit us. And then it hit us obviously in the Adani fiasco. And I think let's not forget, in the global equity basket, India has been one of the worst performing markets in the world, sadly enough, in the last 2.5 months. This is a tag that we've not seen in 3 years. And therefore, clearly, there is something wrong somewhere. The point that you made makes sense. But when I look at the sum of the parts argument, if I look at the index heavyweights, I don't see too many names that can actually propel this market past 18,050, because banks are in a difficult space. Reliance is not doing too well. IT cannot, carry the burden for too long. Stocks like ITC and L&T, and Bhartis of the world have just risen too much, and they don't have the momentum to, scale greater heights. So the sum of the parts calculation tells me that the downside potential is far greater than the upside. And as a technician, as I said, look at the price action, the momentum, and the participation. That's been quite negative. The only bright spot is the mid caps and small caps, but even there we are getting a little concerned now.
A little concerned when it comes to the mid-cap space, but what's your view, Gautam, when it comes to the entire banking index? Because that's been the clear underperformer this year with a cut of what, around 4% versus Nifty, which is down around 1.5%, 2%. Do you see a reversal soon in the bank Nifty?
I don't think so. I think second half of last year, we saw a phenomenal rally on the bank Nifty. I think we had levels of 44, 500. It was great going. Everything participated. And things just changed completely in the last 1.5 months. I think there is a lot more room to fall. Our initial target was around 39,600, which was tested. Anybody looking at the charts would know that it was the important support. From there, we've seen a bit of a bounce. But the bank Nifty, once again, if you look at the last 5-6 days, it's not been able to take out that level of 42,000. So till that number does not get taken out, we would remain bearish. And we want to believe that eventually 39,600 will break, leading to much lower levels. Again, if you look at the leadership, look at ICICI Bank and SBI, two of the poster boys of the last 2 years. They have stopped outperforming. And HDFC Bank as a stock has just got range bound and it's just languishing just below lifetime highs. Axis Bank, IndusInd Bank, and the PSU banks, obviously the BOBs and the Canara banks of the world, they all have negative setups. So I think banks and Reliance put together would be the reason for the market to break down if it were to happen sometime in the near term.
And Reliance would be responsible. But, interestingly, it's the IT index that has had a fairly decent year with that outperformance. Are you of the view that there is still, that index is still a buying opportunity?
Indeed. So smart money has to move somewhere. There has to be some place to hide at the marketplace, and that is IT. I think the price action has been excellent, while the Nifty has found it very difficult to sustain near resistance. If you look at the IT index, every time it's come close to support levels, we've seen a lovely rebound. I mean, look at what HCL Tech has done, Infosys, TCS, persistent in the mid-cap space, and many, many stocks in the entire IT basket, I think are setting up very well. So while there is potential for the Nifty to actually fall 10% from here, there's potential for the IT index to rise 10%. So that's how we have shuffled our stance, and we've been recommending our subscribers to be topped up in IT, capital goods, auto, and PSU. These are the four baskets that we like. Everything else is an avoid.
Approach Adani group of stocks. They are volatile and they are giving you two-way moves. If you get them right, it's a serious chance to make money.
Was that question for me?
That's
Nikhil?
right. How would you approach Adani group of stocks?
Well, I think it's got a little popular and it's moved deep into retail now. So we are actually avoiding the Adani group now. I think last couple of years was a great money-making opportunity on the long side. Last couple of months was a great opportunity on the short side. It's all played out. Now it's got into a very noisy kind of a phase, wherein there is no trend. Rallies are getting sold into, dips are getting bought into because some people feel that it's a little overdone, which is also a fair argument. So in this, I don't want to be standing in between. Rather stay on the fence and let Adani stocks do what they want to do. So I'm not a buyer, nor am I a seller at high levels. It's just an ignore for me. I think there are much, much better pockets and bets in the market where you are getting a lot of momentum. I'd rather focus there.
Purely on the charts, without getting into a buy or a sell recommendation here, if you have to analyze the charts of the top 3 or 4 Adani group of stocks, do you think the panic lows what were made closer to the first week of Feb, do you think those panic lows could be revisited or they will remain intact?
See, first things first, it's already been a very large fall, right? I mean, and it's been very fast. In a matter of 6 weeks, stocks have fallen 40, 50, 60%, 70%. Now, that's large by all standards. So the panic lows, I think, will hold for some time. But if my overall market view is negative and I believe that eventually the indices will see a breakdown, I think at some point of time, the recent lows could be retested and maybe even broken by a small margin. So I don't see clear-cut bottoming signs. If at all, I would still look at an Ambuja where I feel the recent lows might still hold out. So I would still look at that stock. But everything apart from Ambuja, I think it's still too early to say that the worst is over.
Maintain a bit of a cautious stance when it comes to Adani group of companies in the market as a whole, wherein Gautam has a bit of a negative bias. But Gautam, you're quite positive when it comes to the auto space rise, right? Talk to us about the top bets there.
Yeah, autos have done quite well. I think in a difficult market environment, they held out really well. Look at M&M, how it stood out. Maruti has been respecting support levels. Tata Motors has rebounded from a long-term support. And I think all of these 3 stocks which I mentioned should do well, and it should propel the auto index to new lifetime highs. If I'm not wrong, our working target has all along been about 15,000. So that's another 10-12% from where the index is right now. And somehow they have just gone negative beta. Every time markets fall, somehow there is a lot of strength in the auto space. Fundamentally, people talk about input prices and the impact that could have, on the entire basket of stocks. But as a technician, I see a lot of relative strength, because when you divide the auto index, divide by the Nifty, you get a sense that this is one of the few sectors in the market which is in an uptrend. So I think this is going to continue. And the 3 or 4 stocks that I mentioned, I would focus there. I would not go to the other side. I would not go to Hero or a Bajaj, because there I think there are still problems on the charts and fundamentally is what I hear. But the other 3 stocks which I mentioned, I'm more convinced.
Gautam, every year we get a strong sectoral rotation. For example, I'm just putting in context for the benefit of our viewers. 2021, it was all about IT and fintech. Then the good old value trade made a comeback. The 2002 belonged to NTPC, ITC, and perhaps Coal India. For 2022, if markets have to rotate, are you making a case that it could be autos? Because autos, again, have been almost in a 4 to 5 year kind of a sideways market.
Yes, I think for this year, it has the potential to be a theme that could stay strong the entire year. But along with auto, I definitely want to add IT. I think that will be a bigger theme. That will be a better place to hide. And the third theme, which I've really liked and I've spoken about it every single time on your channel is capital goods. I think I still love the way the entire setup is. L&T has been our favorite for a long time now. And I think it's going to do much bigger things once the market stabilizes. And, and not just L&T, Siemens, Come in India, ABB, lovely long-term setups, great fundamentals. They're all sinking in beautifully. So for this year, as you rightly pointed out, auto, IT, capital goods, looks like the rotation has gone into these names.
For those who bought pharma, with the exception of Sun Pharma, which has given you decent returns, Lupin has been a disaster, Natco has been a disaster. People are still feeling the heat of the sell-off in DVs. Is pharma in a tough spot?
I think it's close to turning the corner, Nikunj. I know it might be a slightly contrarian call, but when we look at the charts in the last couple of weeks, we just get the feel that the selling climax has already played out. And I think that selling climax was triggered by DV's lab. If you look at some of the other names like an Alchem or even a Lupin or a Dr. Reddy's, I think the downside is little, maybe 3 to 5%, and the upside potential is 10, 15, 20%. So for aggressive traders and aggressive investors who don't mind that patience, who don't mind to take that contrarian call, I think pharma is a space where you can start nibbling into. Stay with the top names, stay with Alchem, great earnings, great track record, stay with Dr. Reddy's, Sun Pharma, Cipla, obviously. And if you're stuck with these four and if the pharma index does turn, I'm pretty confident that it will do well. So it's a sector that we are closely following and we have a contra view on the positive side.
Those were a lot of names that you've thrown up. Thank you so much, Gautam, for being so generous. Maybe you're showing us some love on Valentine's Day. And Nikunj, I know a way that you can also spread some love in the office. Their pizzas from Domino's are shaped in a heart. So we're quite hungry already.
Well, pizzas are something which they say it's junk food, and it's for you girls to
We're
decide
ready
whether there's an office hour. I think you're on a keto diet or a vegan diet.
Absolutely no diets today.
And take a look at the flavors and the what they've introduced on Valentine's Day. They're available in 2 flavors, tomato and pepperoni, so one for each of us, and 299 rupees each. It's actually available across Bangalore, Delhi, Mumbai, Chennai, and Kolkata. So
And 30 minutes later, pizza free.
And it's not too pricey, right? 300 rupees, I mean.
and everyone in my ears also saying we want pizza. Patricia, Trevor, everyone. So.
I hear that.
Okay, so that's what's happening when it comes to Domino's. No love on the markets for now. It's absolutely sideways. Yes, there are some individual names that stand out within the broader universe. So like a Dishman Carbogen or an Oil India. Those are some of the names that are a buzz. Quick break. Be right back as we connect